So how can you support a guy like President Donald Trump?
The president has returned to the U.S. This from just moments.
That's a question people ask me all the time, and I get it. Politics are highly personal, but let me hit you with something personal too. I've been both rich, I've been broke under both Republican and Democrat presidents. And I can tell you right now, what happens in a White House doesn't matter nearly as much as what you do in your house. Because what if Trump's economic policies are now helping the average person than the very people who hated him the most? Like for my own mother, she was anti-Trump, period. But when I showed up and told her about the OBB bill, the one big beautiful bill, senior tax deduction, and told her that the RAV4 that she owns cannot be traded in for a US-made Lexus SUV with self-park and all the features that all the car loans that she would acquire with that could now be tax deducted, well, she perked up. She said, what? Trump did that? Now she wants a Lexus RX 350, fully loaded. Because this isn't about politics anymore. This is about stewardship. The one big beautiful bill is flipping the financial script on everybody. And if you know how to use it, well, God bless you. But if you're relying on your next paycheck, you're losing. If you don't own anything, you're taxed the hardest. This bill makes the strongest case ever why every American should own a home, why they should drive American, and why they should start a side business. How? Let's get started. In 3, 2, 1, let's go.
Who are we? Hey, 7-figure squad. What we do? Run it up, run it up.
What's cracking, everyone? Money Smart Guy Matt Sapaula here, hailing to you from Dallas, Texas. And let's get into this one big, beautiful bill. And what are the opportunities? Number one, bigger standard deduction equals less taxes. Wait, I thought tax cuts were only for the rich. Well, actually, this helps the middle class the most. The standard deduction jumps up to $14,000 for individuals, and if you're married, $28,000. Now, more of your income, it's protected from federal income tax. And speaking of keeping more of what you earn, I'm packing this in full at my next event, Cigars, Wealth, and Whiskey, August 20th, here in Dallas, Texas. We've got Marlon Wayans in the building, and this isn't just a business mixer. It's an upscale mastermind for entrepreneurs, influencers, creators, investors, and kingdom-minded leaders. Now, if that's you, link in the bottom, buy your ticket, but seats are limited. But the value is generational. Number two, senior deductions on Social Security. Now, did Trump really give seniors something that they would like? Yes, and it's more than just a talking point. Seniors 65 and above get a $6,000 bonus deduction if single, or $12,000 if married, filing jointly on top of their standard deduction. But this is in addition to the standard deduction of $14,000 for individuals or $28,000 for married couples. So this phases out over $150,000 income for a single person or $250,000 for a joint couple over 65 years old. Now here's a quick case study. A retired couple, both 70 years old, earning $80,000 a year, including Social Security. Now they qualify for both the $28,000 standard deduction and now the $12,000 senior deduction. That's $40,000 in total deductions, cutting their taxable income in half. Now they're only taxed on $40,000 instead of the $80,000. Now that's real protection for those living on fixed income. Number three, SALT deduction raised to $40,000. Didn't Republicans hate high tax states? Well, then this is why Trump is helping them out. Well, SALT stands for state and local taxes. Now, this bill raised the deduction cap from $10,000 to $40,000. Now, here's a quick case study. A California couple earning $180,000, paying $15,000 in state income tax and $12,000 in property tax. But now they can deduct $27,000 instead of just $10,000. That's over $4,000 in tax savings. Number four, MAGA accounts for newborns. Wait, the government is giving babies investment accounts? That's correct. Kids born between 2024 and 2028 get a $1,000 seed deposit into what we call a MAGA account. Parents can add up to $5,000 per year, tax deferred. Now, this money can be used for college, a first home, or even starting a business. Now, the withdrawals is not taxed as ordinary income. It's taxed as capital gains, not ordinary income. So here's an example. If a parent adds $4,000 a year to this account and earns just 5% compounding interest a year for 18 years, that MAGA account grows to $139,000. That's generational wealth building. Number five, car loan interest deduction is back. Wait, didn't Reagan kill us in 1986? And now Trump is bringing it back? Yes, let's take it back for a moment. Before 1986, Americans could deduct interest on nearly all types of personal loans, car loans, credit cards, personal lines, even if it wasn't for business use. Now, you bought a car back in the day, you financed the couch, you used a credit card, you got a tax break. Then came the Tax Reform Act of 1986, signed by President Reagan. It introduced Internal Revenue Code Section 163, Chapter H, which eliminated deductions for personal interest. Now, that one move, it wiped out decades of tax breaks for the average American. But now, Trump's one big beautiful bill brings part of it back. If you finance a U.S. assembled vehicle from 2025 to 2028, you can deduct up to $10,000 a year in loan interest. So if you make over $100,000 or $200,000, joint income tax filers. No business for you to establish or required for you to establish. Just the right car and just the right timing. Now, quick side note for my life insurance buffs and retirement planning buffs. Let's talk DEFRA, Deficit and Fiscal Responsibility Act of 1984. Congress cracked down on life insurance tax shelters, but instead of destroying the industry, they passed DEFRA, which included Section 7702. Sounds familiar? That move protected the tax advantages of life insurance and saved the insurance industry by setting clear boundaries of what the definition of life insurance is. The One Big Beautiful Bill is doing the same thing, rewriting the rules, but creating opportunity for those who are informed and prepared for what's in it. Where will you stand? Number 6, pass-through deduction extended. So W-2 employees are still paying more than business owners on net income? Correct. LLCs, S-Corps, and 1099 independent contractors keep their 20% deduction through 2035. Here's a case study. You're in $120,000 as a sole proprietor or 1099 independent contractor. You get $24,000 deduction, only pay tax on $96,000 of income. That's $5,000 to $7,000 saved, bam, instantly. Now, imagine staying as a W-2 employee and you're earning $120,000. That whole $120,000 is now exposed to federal income tax. This right here inspires entrepreneurship for people to start a side business, a side hustle. More people now are betting on themselves, or at least considering it. More small businesses equal what? More jobs. And more jobs equals what? Less dependency on government and more power in the hands of the American people. Now, ever wish you could pick my brain for 5 minutes? Well, now you can. If you've got a smart, specific question, well, send it to me on Connect. I respond to you directly. No fluff, no pitch, just real answers for will builders. Connect with me on Connect. Number 7, bonus depreciation is back. What? I can write off my gear the year I buy it for my business? Yes. Buy a laptop? Buy a camera? Buy an SUV? Now you can write it off all this year, not over 5 years. Here's a quick case study. Let's say content creator. I spent $6,500 on a camera, $3,000 on software and a laptop, $15,000 on a used Chevy Tahoe. All of these are for business use. Now they get to write off the full $24,500. Now, in the 24 income tax bracket, that's $6,000 in tax savings, and that's fuel for ownership. And by the way, before I continue and wrap up, I want you to make sure you consult your tax professional on everything I just talked about. I'm not a tax professional. I'm just giving you advice, passing on information from a financial coach and person that's advising and coaching business owners on growing and scaling their companies. So make sure you take whatever I shared here to your tax professional and make sure you incorporate specific to your situation the legal rules of implementing the One Big Beautiful Bill. So now what? You've seen how this bill is reshaping the game for families, for business owners, for retirees, for parents. And if some of these things like resonate with you, like really hardcore, DM me meeting in the comment section below, and my team will connect with you to create a custom plan for you to consider starting your own business. Plus, you get my free PDF if you connect with me on my best-selling book, Faith Made Millionaire. And if you got value from this episode, drop one of these 3 words in the comment section below in the comment section: ownership, stewardship, or clarity. Then, if you haven't done so already, hit subscribe so you don't miss the next episode. Make up your own mind, but whatever you do, don't sit this one out. Appreciate your time and attention, and until we meet again, continue to live smart, continue to love smart, and be money smart today.